All right, everyone, welcome back to the channel and thank you for tuning in to another video here. I want to talk to you today about, I guess I want to use confluence, additional levels of or means of being able to look for more confirmation when we're using or trading supply and demand. And people always ask me, have I used Fibs in the past, or do I use Fibonacci retracements as part of my trading? I talked about this in videos in the past, over the last few months. I'm not a straight on Fibonacci trader. Okay, from time to time, I will pull a fib just to kind of gauge my interest, just as I do kind of like using the volume profile. Where does the interest or probability of a level lie at? So if I'm looking for, like, say for instance, a supply zone, and I run a fib based on a aggressive selling to the downside, or an impulse move to the downside, and I run a fib from that high to down to that low, say for instance, and then I'm looking over to the right at my volume profile. I'm using multiple means of confirmation or confluence to be able to depict an area where I can place a trade or take a trade at. Okay, it just gives me more confirmation when I'm looking for an opportunity to trade from within the market. Okay, so today I want to talk a little bit about fib retracement. Yes, it can be used as a powerful tool, a tertiary means of a indicator tool to use as part of your trading, and we're going to talk about how to actually do so, within this video. So what I want to show you today is a trade that I took, and I posted it over on our Discord community, which I'll show as well. And as well as some of the other members that are part of the Discord community took the same exact trade. I didn't even have to post the actual or send out an alert, if you want to say, about that particular level that I'm going to show you, or that zone, I should say, which was a supply zone. Because a lot of traders on the Discord, some of the members there are already in tune to trading supply and demand and the strategy and how I trade it, and some of them have actually put their own twist on it, which is a great thing. I always talk about finding a strategy that works for you and then putting your own little flavor or twist on it. So I'm going to show you my trade that I took, okay, and using that as an example to talk about fib retracements or Fibonacci retracements, as well as some of the other trades or similar trades that some of the community members took just as well. Same exact trade on the Discord community. So if you have not signed up or clicked on the link down below in the description portion of this video, click on that link. It's for the Discord. Invite yourself in. Come over to the Trading Floor channel on the Discord community. We have a great community where we have somewhere between 260, 270 members active each and every day that are tuned into that particular channel, and it's growing by the day. So I guess that means I'm doing something right. Hopefully, definitely means that through all the positive comments and replies, I appreciate all that. I'm so glad to see people really succeeding and starting to see the light at the end of the tunnel, probably after spending so many years of struggling. So if you're not part of this channel right now, I'll highly recommend do so, because I provide loads of information which you may not find on other channels, which you may have to pay a price, whatever the case is. I provide a lot of information and content for free, okay? I talk about a lot of things. There's over close to about 600 videos on this channel. I'm not saying you have to go back and watch every one. I'm just saying there's a lot of valuable content that a lot of individuals don't like to share with you. They like to keep it closeted, or they like to make you pay a hefty price, if you choose to, to learn something, okay? Now, I do have on this part of this channel, which is for elite members, those that are interested in joining and becoming an elite member. All it is basically you supporting the means or efforts of me providing and creating this content so that you can become privy to it. And we're talking about $6.99, okay? A month, not a day, not a week. It's just a month. It's not $699, it's $6.99. All that is basically you providing a means of supporting my efforts and pushing out this content, okay? I talked about this before. I just want to quickly say this. I never had interest or means of really starting a channel to talk about things publicly and make videos. It was more so for me to be able to reflect back on my own trades, okay, and being able to go back and review. So I record stuff for my own self. But I really thought about, you know, and took to heart that there were lots of individuals out there that are struggling, and I once was a struggling trader as well. So that's why I started this channel and started making these videos. And you know, for $6.99 a month, you know, you get rewards behind that, okay, which is part of the YouTube membership subscription program. You get the emojis, the badges, the priority reply to comments, but also I provide the trade breakdowns when I post those videos to the elite members, to where I go in detail or in depth about the trades I take. But I don't want to keep talking about that so much. So if you're interested in becoming an elite member and really supporting the channel and becoming a loyal supporter to the channel, just click on the join button and you'll see 2 tiers there. The elite membership is the one you want to choose. But I'm going to go ahead and talk about the Fibonacci retracement and how it can be a powerful tool to use as in part of or incorporate it when we talk about supply and demand as well. So I'm looking at the NASDAQ chart right now. I look at both markets, both the ES and the NASDAQ. When the ES is not really doing too much and kind of stagnant, moving sideways, I'll switch over to the NASDAQ because it's a lot more volatile, a lot more movement. But let's jump down to the ES chart because that was the trade I wanted to talk about, okay? So I'm going to use my 12 range chart. I don't use time-based charts, guys. I trade range charts. If you trade time-based, that's fine. There's nothing wrong with that. But the trade that I want to talk to you about is it's on the ES futures, okay? And we primarily discuss the indices futures here, or the index futures here on this channel here. So pretty much everyone who's part of the community, or all that are part of the community, Discord community, are trading the indices primarily. You know, it could be the Dow, it could be the NASDAQ, or the ES, but most of us are tuned into the S&P 500, the E-mini S&P 500, regardless if you trade the micros or the minis, okay? So let me show you this, okay? What we had here going on was the market was making higher highs and higher lows to the upside. So we got a bullish sentiment or bias on my 12 range chart, okay? Even if we look at the higher time frame, the 60 range, okay, we are bullish just as well on this chart here on the ES. So both charts bullish, higher time frame and lower time frame. But what I noticed here was that as price was making higher highs and higher lows, we kind of peaked out at the tops, okay, and then we got pretty much a break of structure to the downside here. So price pushed lower here, okay, with the impulse move to the downside right here. Now there is, you know, demand resting down here in this area, but when I saw price right here kind of peaking out and turning around, and then it broke below this area here at 45.32, this was an aggressive selling opportunity or impulse move to the downside right here, okay? So that's why I put this red line right here where this, and I marked off this zone here with this box you see here, this rectangular box. This is a supply zone right here on the 12 range chart specifically, okay? I didn't even look at the 24 range or even my 60 range chart. I saw this setup here and I gained interest into it. Also, there was a gap or imbalance resting right here back at the zone. Now, I talk about imbalances a lot on this channel because it is a intricate part to my trading strategy, the breaker structure, looking for the gap or the imbalance back at the zone that you draw and looking for rejection to get into your trade, okay? So we have both this supply zone, the imbalance, and we had an impulse move to the downside. So what I like to do, I'm going to show you how, you know, the Fibonacci tool can be used, because I look primarily when price, you know, is made an impulse move. You know, if I'm going to use it, you know, and just as well, I use my high volume area here. You know, my volume profile. Okay, so I drew the impulse move from here down to the low right here. Okay, this was pretty much a impulse move to the downside, aggressive selling. Okay, so when I drew or took the retracement, okay, back to the upside, typically you want to look somewhere between the 61.8 and maybe the 76.4 or 76.8 area. Which will put you back primarily once you draw the zone. So I'm using the tool, the Fibonacci tool, as a means of confirmation as well. So I already had the supply zone here, okay? Drew the impulse move, price retraces back to the zone, right, or back to the area. And when it retraces, it comes right back to the 76.4%, which is back at the supply zone, and at the area where it fills in the imbalance or gap right there. So I got multiple means of confirmation or confluence right there. At that point, all I'm looking for now is rejection, okay? Now you can scale down to your lower time frame, the 4-range chart, and you can look for those typical signs of rejection like I talk about in many videos, whether it would be the M structure formation and take a short, or you can look for a breaker structure to unfold on the 4-range chart and then pull back to a key area supply on the 4-range chart, okay? So, but me typically, you know, I would trade most times off my 12-range chart when I see a break of a candle in the opposite direction. So this being the last bullish candle to the upside, I'm looking for a break below, which would be this red candle that took out the bottom end, the body and the wick of this last bullish candle to the upside. So once I got the break below here at 36.25, I'm going short. Now, what am I aiming for? Most times I'm aiming for liquidity, which is areas of equal lows below. Okay, so you know, to fill in some imbalances or gaps, but as well, if I see with this liquidity resting below, I know that price is probably going to target and aim for that area just as well. And price did. We got the rejection. We got the break of the candle in the opposite direction. This was the area right here where I have this green line at. Those were equal lows. That's liquidity. Price comes down there. Look what it does. It takes it out. I picked up 6 points on that move right there, okay? Just basically, again, drawing a supply zone after we got the impulse move to the downside here. Looking for price to come back, tap into the zone, typically between that 61.8 and 76.4 area, and to fill that gap right there. All that means of confirmation, plus we have price pulling back or retracing to an area where we have price at a premium, meaning when you're looking to sell, you're looking for price to tap back into an area where prices are high at. Okay, you don't want to be buying and selling at discounted areas or buying in areas where there's premium. Okay, you don't want to be doing that. I always talk about buy the lows where there's discounts, sell the highs where prices at a premium. Okay, that's the key to trading. All right, understand that and remember that. Okay. So that's why I took that trade right there. It was a great opportunity. So I'm going to show you now over on the Discord the trade that I took. Okay. So this is the Discord community, what you see right here. This is the trade I took right here. Okay. This exact trade I just showed you on my 12-range chart. Price pulls back. This is a supply zone. That same red line that I showed you. Price pulls back, taps into that 76.4 area, and fills that imbalance or gap right there. This was the entry I took. Right here down to right here, which was a 6-point move or 6-point run. Now, some of our other fellow traders took that just as well. As you can see, let's make sure here I'm looking at the same setup. One right here, okay? This member here took this trade here, okay? Same exact setup. I didn't even put it out that that person had already taken the trade. So, you know, we as a collective community are just coming together and sharing the same type trades, okay? They're watching the videos, they're picking up, how I trade, not telling them to trade just like me, but they're picking up and using, the strategy, maybe using it, incorporating into their own, and, and they're able to see what I'm talking about and throughout the videos, okay, that I make on this channel, excuse me. Also here, another member that's part of the community here, same exact trade there. I didn't even put it out prior to or beforehand. They saw the opportunity and traded the same exact setup. Okay, so all I'm saying is that we have members that are part of the community here on Discord that are faring well themselves. We get new members every single day, whether beginner traders or not, that are still in the learning process and quickly learning how to trade supply and demand. Supply and demand is powerful stuff, and when you have are able to add in means of confirmation or have additional means of confluence, it aids in your trading, guys. Trust that, okay? Fibonacci can be used as a tool. I don't trade it, just looking for fib levels and then look for price to retrace back to a fib level and just trade it that way. No, I would incorporate it from time to time and looking at, using it as a means of area where price will pull back to. If it pulls back to say, and I talk about this too in videos, the halfway point or 50% of an area, of an impulse move, I'm not looking at that. I don't want to be part of a trade in the middle or 50% of a leg, okay? Just, when you're trading in the middle of something, it's an iffy situation, okay? So I like to see price retrace primarily close back to the area where it actually started at, meaning the origination point where a move or impulse move started at, okay? So understand that as well. So I just wanted to talk about that and how you can use Fibonacci retracement, because it is, you know, it's a good tool to use, but I highly recommend just don't trade fib levels alone. You know, have a rock solid strategy that allows you to profit in the market, and back test it and even forward test it, whether you got a demo. Just keep testing it to make sure that, you know, not everything's going to work 100% of the time, okay? We as retail traders know that, and you should know that, okay? Because we don't control and provide the push in the market, all right? We don't have that type of capital to make the markets move the way they do. We just want to be able to ride on the back end with those big banks, institutions, when when we see their setups and make their move, you know, they make their moves. We want to get in those type trades, okay? When we see those opportunities unfold. But that's all I have for you guys today. Again, if you're interested in becoming part of the Discord community, find the link down in the description portion of the video. Click on it, invite yourself in. Come over to the trading floor channel. That's where we come together collectively as traders on the daily during the US session and trade, okay? And we post entries of our trades. And it's a good learning environment for many individuals that may be wanting to understand or trying to learn the strategy, as well as you know, when traders or members post their screenshots of the trades, it gives you an opportunity to maybe ask questions, you know, and we see it all the time on the channel, and those members engage and answer questions, and we're just here to kind of, you know, help people along, okay? Because it was, you know, it was my idea and goal to start this channel to see people succeed. So, but that's all I have for you guys today on this channel. Again, sub to the channel if you're not already a current subscriber. Click on the sub button down below. Make sure to turn all your post notifications on so that you are immediately notified when content or video drops here in this channel, because you won't, trust me, you're going to want to be part of what's going on here. So make sure to click on the sub button down below. Turn your post notifications on, and the most important part, guys, please drop a like on today's video. I appreciate it. I'll see everyone in the next video. It is currently lunchtime here Eastern time, so I'm going to stand down right now probably from doing any trading because things kind of, you know, come to a standstill, or they kind of start moving sideways at this point. So maybe around 2 o'clock, we'll see. But I'm pretty much done for today. I took a few trades. This was the only trade I took on the ES. But I did take a few trades on the NASDAQ, okay? So I appreciate everyone who tunes in and who are currently loyal supporters and community members here as part of the channel. Thank you for doing so. And everyone who is an elite member, thank you, thank you, thank you. We got tons of members there for basically, you know, supporting me as a content creator. Thank you. I'll see everyone in the next video.